Hello, welcome to this Ned Davis Research podcast, where we will help you see the signals. My name is Brian Sanborn, NDR's Global Head of Investment Solutions. In this episode, we'll be speaking with NDR's Chief Economist, Alejandra Grindal, regarding the U.S. economy relative to other economies. Alejandra, international equity markets outperformed the U.S. in 2025. Do the macro data support that behavior?
Oh, yeah. So thanks for having me. So, from a macro perspective, we've actually been observing this divergence between the US and other economies since early last year. And one of the most compelling signals depicting this relative US macro jitters has come from macroeconomic expectations. So, US economic expectations versus the global economy, according to Suntex, which is an investor survey, turned net negative in March of 2025 and has remained net negative almost exclusively since then. And historically, when you have relatively weaker economic expectations in the US compared to the rest of the world, it's been associated with US equity underperformance on a relative strength basis. And the interesting thing is that expectations for the US economy aren't necessarily negative, which, isn't a bad thing, but they're just much better everywhere else. And incidentally, that happens to be led by emerging market economies.
What is driving that shift in economic expectations for the US relative to the world?
Yeah, so we suspect that a great deal of US macro expectations are being driven by policy uncertainty. And this is due to concerns about tariffs and immigration policies, which in the long run could reduce US potential growth. And what we have found is that when economic policy uncertainty has been elevated, as it has been for over a year, US equities don't end up performing as well on a relative strength basis.
You've discussed macro expectations, but what about the hard economic data? Are they showing a similar story for the US on a relative basis?
Yeah, so we're actually seeing that. The PMIs, the Purchasing Managers Indexes, which are available for various countries around the world and are kind of calibrated to be comparable, they are showing that these policy concerns could be impacting the hard data. So the S&P Global US Composite PMI has been looking worse than the rest of the world in recent months. And again, not, in and itself, it's not bad, but compared to the rest of the world, it's been looking worse. And this has also historically been a relatively bearish condition for US equities. And so we recently had readings for the flash PMIs for February, and they actually suggest that trend continued this month. And, as I said, like most of the other data, the US composite PMI is still showing pretty decent growth, but it's just the fact that other economies are looking stronger. Although it is a bit more volatile, another indicator we've looked at is the US Citigroup Economic Surprise Index versus the rest of the world. And if you look at the US Surprise Index, historically, it has underperformed the world about 50% of the time. So that's kind of the basis we can start off with. However, since the beginning of last year, we've actually seen this happen almost 70% of the time. So this is a pretty big jump. And again, this has usually been associated with less upside in US equities versus the rest of the world.
Alejandra, thank you for your insights. NDR clients can read Alejandra's research notes in her Global Economic Focus publications. The indicators Alejandra and the research team developed for our subscription service are also used in our model portfolios, which are available for direct delivery, on TAMPs, and as ETFs. For more information on NDR, we encourage you to visit ndr.com. Also, for those listening in audio-only mode, video versions, including the charts of See the Signals, are available by going to info.ndr.com/ndr-signals. Thank you for joining us as we help you to see the signals. So long.